Hello, dear traders. How are you guys doing? Welcome to my channel once again. Today I'm going to be showing you a very interesting price action that happened on gold this very week. So we are going to be going through it together. But if you have noticed, you see that I've not posted for some 2 weeks now. So I've been trying to study something which I'm going to be showing you guys consistently. I'm going to be showing you guys day after day on this very channel. So please make sure you subscribe and make sure you turn off the notification button so that anytime I post a video, we are going to be the first person to be notified. So let's get into the video. As I normally say, when you're doing your analysis, first and foremost, you need to start from a higher time frame. Why? Because you need to know where price is going to from the higher time frame, because normally the higher time frames, they do control the lower time frames, right? So you need to first of all start from the higher time frame, get to know where price is going first before you'll be able to now to go lower to a lower time frame to try to refine your entry to get a better risk to reward ratio, right? So now if we look at gold here on the weekly time frame, we notice that we actually made an all-time high on gold after price had to push these three tops here. So price created this high, and this is the all-time high for gold at the moment. And if you have been following my lessons, you'll notice that I've been calling these levels that price will grab this liquidity for quite a long time, and then price did. So we are currently in a bullish move on gold for the moment, but though price took this buy side liquidity, we started seeing a pullback down. But now, despite the pullback down, price is still trying to maintain, price is still respecting bullish PDRs. And right here, we had a bullish 1 week order block, which was still supporting price, right? So which means we are still bullish until price starts to break bullish PDRs. All right. So we are still bullish until price starts to break bullish PDRs. So we had that bullish order block there on gold, and then price came back down to it, retested it, and then the following week, after we had this bullish contraction, the next week closed a bullish candle, and then this is taking previous week's high just on the weekly time frame. That's giving us a signal that price would want to go for higher prices, right? So yeah, that's just what you can see on the weekly time frame here on gold. I don't want to go much to a higher time frame so that this video will not be that long, right? So at the moment price took price previous weekly high here, you will know that this is your target, and then this again is going to be your target. So let's move down to the daily time frame and then see what we had this very week. Now, when you go down to the daily time frame, you will notice something here. Price, upon coming back to retest that 1 week order block, had a stop hunt here, and you have noticed how price moves recently, a lot of liquidity grab and stuff like that. So we had a stop hunt here, a very, very good one. Price took out this liquidity with this candle, and so the moment price takes the high of that candle, which was previous weekly high, that gives you more confirmation that price wants to seek higher prices. And this now will be your next draw on liquidity. That will be your draw on liquidity. That's your draw on liquidity. And then that's the first one. And then this one should be the second draw on liquidity. So now, when you're going lower to lower time frames, you need to be asking yourself questions, right? You need to be asking yourself questions starting from weekly profiles and so on. Now we are dealing with the weekly time frame, saying that the weekly is bullish. You know about the weekly profiles. Whether Tuesday, Wednesday creates the high of the day most of the time. Friday can create the high of the week most of the time too, right? So those are the questions you need to be asking yourself, like, okay, where is the high of the week going to be created? Or where is the low of the week going to be created? All right. Now, this particular day here, this was actually Thursday, and you will notice, you will see here that price created a valid swing low here. Okay. After price gave us this flagship reversal candle, after price printed this flagship reversal candle here, this was a confirmation for higher prices. Okay, because at the moment price took previous weekly high. So this flagship reversal here, or you call it a bullish engulfing, was a confirmation for higher prices, right? I know most of you would have been expecting this to hold like a mitigation block, or this to be hold like a bearish order block and so on. But know that the weekly time frame was not in line with this, and the lower time frame cannot stand against the higher time frame, right? So the higher time frame will always win. Now, at this point, this was Thursday. With the close of Thursday here, you can confidently say that price is coming for this high and then this high as well. Okay, so at this moment, your daily time frame is in line with the weekly. And now all you need to do now is when you go down to the 4-hour, all you're trying to do here is just to look for discount PD arrays so that you can leverage on them to find out entries or to get entries on lower time frame. So if we go down to the 4-hour time frame, we see that price retested a bullish order block from here, and then it went higher, creating a displacement which is a fair value gap here, and then price is about coming back to fill it. So we now have a valid swing low here. We have a valid price range, which is this range low, and then this is the range high. This is what we have at the moment, okay? This is what we have here on the 4-hour time frame. So for us to expect higher prices, remember I said you see here prices respecting bullish PDRs. It respected this other block, same as it respected this breaker here, all right? Now, at this point, all you need to do is shift lower to a lower time frame, like 15 minutes, to look for an entry at this point. Because if you're a swing trader, you can still take an entry, maybe from the 50% of this fair value gap with your stops below this low, because right here, this is where your invalidation for this 4-hour setup is, right? That's where your invalidation is. So at this point, you'll be expecting prices to go to the draw on liquidity here, and then furthermore to grab this one right here. Okay, something like this. If you are actually a swing trader, this is what you want to look out for. I know a lot of traders are going to be trapped from these areas. You'll try to refine some funny other blocks from here and so on. You need to know that to be able to escape from this, you need to be looking at the higher time frame. You need to know what the higher time frame is trying to do so that you don't get caught up trying to trade against higher time frame PDRs, right? A lot of smart money traders make this very, very easy mistake, simple mistake, which is not supposed to be so, right? You need to know your higher time frame direction first. If not, you're going to be caught up with inducement, other blocks, and stuff like this. So, right. So, like I said, if you're a swing trader, you can actually take this entry from the 4-hour. But if you are not a swing trader, you would want to go down to what to the 15-minute time frame and then try to figure out an entry within this area of a fair value gap on the 15 minutes, so that you might have a smaller stop loss and a better risk to reward ratio. So even if you're using a Fibonacci, you'll notice that at least we are around the 50%. The fair value gap is around the 50% of the price range on the 4-hour time frame. So let's go down to the 15-minute time frame. Now, currently we are on the 15-minute time frame, and if you look here, you will see that you have a huge displacement here, all right? And then we have right down here a breaker block, right down here. Now we have this area to be our breaker. Let's see, 30 minutes might be much clearer on the 30 minutes. So now, remember, this is the 4-hour fair value gap. We can even delete it now because we know the area on the 4-hour. So this is it. This is how it looks like on the 30-minute time frame. We have this area, which is our breaker. Why is this our breaker? Because simply price took out a low before breaking that high. This is how you mark out your breaker. All right, price takes a low and then it goes higher, breaking a good order block that was supposed to be respected, and then price retests to react from there to move higher. That's your breaker block right there. All right, so there are things that makes a breaker block to be very, very strong. All right, quality breaker blocks. I'm going to be making a unique video on that to make you understand how to trade other blocks effectively. So now we have this has been formed on the 30-minute, 15-minute time frame. So we're having a potential breaker block to use as our entry. All right, so let's see how this plays out at this point. Now, remember, if you don't see a clear breaker here, you can always a little bit shift to a higher time frame to make sure that you don't get or you don't miss any move. Okay, you don't miss a move, maybe because price was trying to retest on a little bit higher time frame and you were not aware. Okay, so at this point, this is our breaker right here. we need to have what? A last up close candle with a good body that was supposed to be our bearish order block to now become our breaker. Okay, so this is what we have here on the 30-minute time frame. And now, since we expect this breaker to hold, though we still have all this range to be what? A fair value gap here, our stop loss is going to be below this candle. All right, that's just to be safe because price might want to completely fill the fair value gap from this range completely. All right, so your stop loss to be at the low of this candle if price is to respect this breaker. Okay, so let's see. Like I said, price did a stop hunt, price cleared these lows before going back to give us a shift in structure from here. Okay, so let's see. At this point, this is the setup you are getting from this breaker. Like I said, you can put your stops here. For some people, they want to put exactly at the low of the breaker block. For me, I prefer it to be much safer, right? So that you don't get stopped out for any reason, trying to be too smart with price and stuff like that. So we target buy side liquidity. Remember, the higher time frame is suggesting higher prices, and every other time frame actually now is in line with the higher time frame. So we can confidently say that this is going to be an A+ setup because all the higher time frames are in line with each other. So let's see how this played out. So at the moment, you notice something here, okay? Price actually came down, did not touch this breaker, all right? Price did not feel this breaker here. And then after feeling this fair value gap, we noticed something here. Price went higher to break a structure. This is simply an indication that price is not coming down to this breaker anymore, right? Because price has made a new high. We're having now a new range. And with this new range now, we have a new breaker block again. Why? Because also price did take out a low from here before going up to break this other block here, which was supposed to be a very, very good bearish order block, right? So we are having now a new breaker here from a new range, which is a breaker plus a fair value gap, because within that range, within the range of this breaker, we also have a small fair value gap. And that's one of the things that creates a strong breaker block with a fair value gap, right? So this is going to be now our new entry. This actually here, price will not be coming back to it as price has created a different, a new trading range, right? So our focus is going to be now on this breaker, and our stops will just be below that candle. So we are no more interested in this for now. Price won't be coming back to it. Like I said, we are now having a new trading range because price has totally filled this. Price has filled this inefficiency, which was on a higher time frame. Okay, so if we go to the 4-hour, you will notice that price has filled the 4-hour fair value gap. Remember, it's not a must that price must react to a bullish order block, breaker block, or fair value gap even, right? Price can continue higher before coming lower. It depends on the draw on liquidity you have at the moment, right? If it's close or if it is a little bit far, it depends. Price can go to your draw on liquidity first before coming back to fill some fair value gaps and so on, right? So let's look at a 15-minute now to see what price gives us, if we're going to be respecting this breaker again, or if price will want to continue higher. Right, remember I said we have our draw on liquidity first. It was determined from the higher time frame. Okay, so right, our draw on liquidity was determined on the higher time frame. So let's see right here. Let's see if price comes back to respect this breaker. So price came directly back to the breaker block, filled the fair value gap. Remember I said that's one of the reasons, or that's one of the confluence that creates a strong breaker block, right? A fair value gap within the range of a breaker block, okay? It creates a strong breaker. So you can see how price came down, filled the fair value gap just by 1 pip, and then react to the breaker block, and we had this massive push to the upside. So let's see how it went, then boom. All right, so that was a very good one, and this is a trade. You can say it's your A plus straight setup because it all aligned with all the time frames. Okay, all the time frames were in line, and then when you have all the time frames in line with each other, it creates it gives you that A plus setup that you want. Okay, it gives you that A plus setup. So let's look at it again with let's go back to the higher time frame and try to see what actually happened. All right, so let's go to, just delete this. Let's go back to weekly time frame, daily time frame. Now, this is how it went on the daily time frame. Thursday here, remember this was our confirmation for a bullish Friday, and this was Friday, price went higher, grabbing the buy side liquidity. So at the moment, we are still currently bullish on gold, so we might be expecting just maybe a pullback for price to continue higher to go again, taking the all-time high on gold. This will continue to happen unless we start to see price start breaking bullish PDRs, right? So let's see something here. That's for the daily time frame, right? So let's put 4 hour and the 15-minute together. Now you can see how it looks like here on the 4 hour time frame. On my right is the daily time frame. All right, and then in the middle we have the 4 hour time frame. You can notice how price came back into filling this fair value gap on the 4 hour, and then we had that bullish push to the upside. So this was where we had the move when price came back to fill this Ishna order flow entry drill on the 4 hour time frame, going for the buy side liquidity. We then have had our trade setup on the 15-minute. You can see here everything is in line. The daily is bullish, 4 hour is bullish, 15-minute is bullish, and then you have your perfect entry. So guys, I don't want to make this video to be too long. Just make sure, I hope you learn something new. Please make sure to subscribe because I'm going to be uploading some very, very unique and very important content for you guys this coming days. All right. So please like, share, and let me have your comments, which lesson you want me to produce next, or any question you have, ask it on the comment section so that I can give you can make a video on that. All right. So thank you guys for watching.